Welcome to the Learning Square. In today's video, we will be talking about the basics of stock market. So, let's get started. Here is a short summary of the topics we will be covering. We will see 1. The history of stock market. 2. What is a stock? 3. How does a stock market work? 4. The U.S. Stock Exchange. 5. The U.S. Stock Index. And 6. How to trade. The history of stock market. In the 17th century, the Dutch East India Company sent many ships to different countries around the globe to trade gold, silk, and porcelain. To run this, it needed a lot of amount which the owners did not have. So they approached the individual citizens for money, and in turn were promised profits when the ship returns, post-successful trade. This helped the company collect the required amount of fund needed to run the operation. The people who invested in the ships were skeptical whether the ship they have invested will return back. There could be a lot of things that can go wrong with the ship. The ship can be lost, raided, or struck by storm. This made the people invest in multiple ships to ensure that at least some of their ships return back safely and they get the required profits. This is, in general, a high-level idea on how this stock trading process started. The stock market that we currently have is way more complex than before, so, without much ado, let us now get into the details. Let us start by discussing on what a stock is. You can think of stock as a type of investment which represents an ownership in a company. For a company to grow, it needs a lot of capital funds. For this, the company is divided into different parts, which we call as shares. This share can be sold to the public to get funds. Let us discuss this with an example. Consider a businessman who owns a hotel worth $10 million and plans to grow his business. For this, he estimates a need for an additional $5 million. So, he issues a share of his company in the market to allow the public to buy it. The public invests in his company and the businessman gets the amount he needs to grow his company. The public gets a share of his company and hence are called as shareholders. Shareholders are in fact owners of a fraction of the company. So, you may now be wondering how a share and stock are related. Technically, shares are unit of stocks, but the two terms have often been used interchangeably. Now, let's see how a stock market works. The company, first, lists itself in a stock exchange. A stock exchange is a place where the people meet to buy and sell shares of company stock. This is the first step for the company to go public. This is referred to as the IPO, initial public offering, also referred to as the stock market launch. The IPO launches the company into the official market. Consider, person A wants to trade and is very new to the stock market. He approaches a financial broker to assist with his transaction. It is because the broker works in this space and is very familiar with the working of the stock market. The broker guides the person on what and how to trade, and also assists in getting the transaction done for the person. In this example, if person A wants to buy 100 shares of company ABC, he approaches the broker, who in turn gets in touch with person B, who is willing to sell the share. The broker then contacts the person A again, thereby getting the trade complete. By helping with his transaction, the broker charges a brokerage fee or a commission for his services. People who are very familiar with the stock market can also directly trade with the stock exchange, thereby avoiding the brokerage fees. Let us now see how the people who invest in a company earn profits. When the company does good, it does not pay the shareholder directly. A good performance of the company increases the price of the share, and if the shareholder sells his share, he gets profit. The share price is based on the demand and supply. The demand and supply is in turn based on many factors, including fluctuating prices of material, changes in methods of technology, labor costs, and much more. Let us see an example. Person A has purchased 100 shares of a company priced at $20. the company does good, and this is reflected in the share price, which increases to $22. Now, if the person A decides to sell the shares, he earns a $200 profit. This is how the profit works. Similarly, if the company does not do good, this gets reflected in the stock price and the shareholders incurs a loss if he plans to sell the share at a reduced price. There are also companies who pay their shareholders on a regular basis for owning their shares. This is referred to as dividends. Let us talk about the U.S. Stock Exchange. There are three major U.S. financial securities markets. 1. The New York Stock Exchange, NYSE. 2. The National Association of Securities Dealers Automated Quotation System, also referred to as the NASDAQ. And 3. The American Stock Exchange, AMEX. We have other stock exchanges as well, like Boston Stock Exchange, Chicago Board Options Exchange, and Miami Stock Exchange, but we will be limiting our discussion to the three major stock exchanges today. The New York Stock Exchange is the world's largest stock exchange by market capitalization. They house some of the biggest publicly traded companies, like McDonald's and Walmart, and is a place where one can get a large number of blue chip stocks. A blue chip is stock with a national reputation for quality, reliability, and the ability to operate profitably in good and bad times. Over 3,000 companies are listed in the New York Stock Exchange. NASDAQ is a global electronic marketplace for buying and trading securities. It was the world's first electronic exchange. Most of the world's technology giants, including Apple and Facebook, are listed on the NASDAQ. Over 2,700 companies are listed in the NASDAQ. AMEX. The majority of trading that happens here is in small cap stocks, and this is a great place for emerging business. Over the counter, in short OTC, refers to the process of how securities are traded for companies that are not listed on a formal exchange such as the NYSE or NASDAQ. Securities that are traded over the counter are traded via a dealer network, as opposed to a centralized exchange. OTC usually houses the penny stocks. Penny stocks are stocks that trade for less than $5 per share. Stocks listed in OTC pose more risk because they are listed here, as they do not meet the requirements to be listed on the standard exchanges. The stock index is a measurement on how the market performance is calculated. There are over 5,000 US indexes, and the primary ones are 1. Dow Jones Industrial Average. This is one of the oldest, most well-known, and most frequently used indexes in the world. It includes the stocks of 30 of the largest and most influential companies in the United States. The Dow Jones Industrial Average is a price-weighted index. It was originally computed by totaling the per-share price of the stocks of each company in the index, and dividing this sum by the number of companies. Unfortunately, the index is no longer this simple to calculate. 2. The Standard & Poor's 500 Index, known commonly as the S&P 500, is an index with 500 of the top companies in the U.S. Stocks are chosen for the index, primarily by capitalization, but the constituent committee also considers other factors, including liquidity, public float, sector classification, financial viability, and trading history. The S&P 500 index represents approximately 80% of the total value of the U.S. stock market. In general, the S&P 500 index gives a good indication of movement in the U.S. market as a whole. 3. The NASDAQ Composite Index. As we mentioned before, NASDAQ is the exchange on which technology stocks are traded. The NASDAQ Composite Index is a market capitalization weighted index of all the stocks traded on the NASDAQ Stock Exchange. This index also includes some companies that are not based in the United States. Now, let us get to the interesting and most important part, which is the method of trading. Trading has been made very easy now, and all one needs is a Number 1. A brokerage account. Number 2. A regular bank account to link it to the brokerage account. And that's it. One can get started. There are a lot of brokerage applications, which offer $0 brokerage fee, and one can start trading with as less as $5. There are many trading applications, which are great for beginners. Here are our personal favorites. 1. TD Ameritrade. This is perhaps the best app for beginners to get started with. 2. Robinhood. This is one of the most user-friendly app to use. The easy interface has attracted many. 3. Webull. This has lots of advanced features and technical indicators, which is great for traders with knowledge. 4. iTrade. This is one of the best apps for mobile. 5. Stash, a great app to start investing amount as less as $5. 6. Acorns, for beginners who wants to invest but do not know where to put the money, this may be a good place to start investing. We have provided the links for each of these applications in the description below. You can click on it, install the app and get started. That's it for today. Hope this video was useful to you to get started with the basics of stock and stock trading. More details on how to use these applications will follow in our next video. Until then, goodbye and thank you so much for watching. Do leave your thoughts, suggestions, and feedback on the comments section below. Don't forget to click subscribe button to get notified for more such videos.